We will start today's session. Uh, just for confirmation, is the recording going on in your screen? Okay, fine. So today we'll be continuing to indicators. Previous class we have learned the variants of indicators, lagging and leading indicators. Today, before moving to indicators, just few 2 to 3 things left out, so we'll be going to that. And then today we'll be learning around not actually, I haven't planned it that way, but still I will be covering 3 indicators. Yeah, I'll be sharing. So now it's visible. So as said, we'll be learning 3 indicators today, but before that, let me tell you few types of indicator. I haven't prepared that previous PDF also, so I'll combine this today's session and before this one, and combine. I will send you the PDF. I'm actually not getting time because I'm having an exam in this month itself. Anyways, now moving to types of indicator. As you can see in your screen, I have mentioned over here 1, 2, 3, and 4 types of indicator. Under lagging and leading indicator, we'll be having different types of indicator. The first one is trend indicator. And trend indicator is an indicator which measures direction as well as strength, but the major part is measuring direction, taking price into consideration. Almost every indicator takes price into consideration, and after that it is being developed. So moving average, MACD, parabolic SAR is stop and reverse. These comes under trend indicator. As you can see, it's also being mentioned that moving average is a lagging indicator, MACD is lagging, parabolic is a leading indicator. And the next comes is momentum indicator. What does the role of momentum indicator is? It measures speed of price movement. The first one was it gives the direction, and the momentum indicator measures the speed. Suppose for example, we are considering let let's say Hindustan Unilever. We have got a direction that yes, it's an upward trend, it will be moving in upward trend. But again, coming to momentum indicator, it gives what exactly the speed would be. Can it cover 20-30 points in just intraday itself, or it needs time? What exactly I need to reconnect? Was that for me or okay. A momentum indicator, I explained. Under momentum indicator, the again 3 kinds. I haven't mentioned all the indicators, just for example I have taken. Under momentum you will be finding stochastics. Actually, the momentum indicators are those kind of indicators which are in a range, which shows us a range. Whenever when we'll be learning stochastic, you will be knowing it exactly what is happening. And CCI, stochastic, is also a leading indicator, then CCI is also a leading indicator. Then relative strength index, it's also a momentum indicator and a leading indicator. And the next comes volatility indicator. Under volatility, we'll be finding Bollinger Band, average true range, and standard deviation. Even Bollinger Band considers standard deviation as a part of it. Again, Bollinger Band is lagging, average true range is also lagging, and standard deviation is also a lagging indicator. Coming to volatility indicator, it tells us about the rate of price movement. uh, in the previous one it is the speed. Here, at which rate the price will be moving, again almost similar to speed, but yes, it is having a different kind of work to do. And the last one which I have mentioned is a volume indicator. This is actually the major part, the strength part is being measured by volume indicator only. It's also mentioned in the first slide, trend indicator also measures strength, but all the volume indicators actually measures the strength. If we will be having volume in a stock, in a script, then only we can measure the strength. So after this we do not have any PDFs or slides to cover. I'll be teaching directly, so with the help of a pen. I'm not that friendly with Photoshop, so using a pen. So fast indicator, the very first indicator which we'll be learning today is moving average. So there are two kinds of moving average. One is a simple moving average, and the other one is exponential moving average, and it's SMA, and the other one is EMA. So coming to the first one, what is an simple moving average? The work of simple moving average is like what does it does. As I said previously also, we are not going to only learn that yes, this is simple moving average, we'll be plotting that in any trading terminal, and we will say that yes, this is being traded whenever it comes down, whenever it crosses. This is not the way we are going to learn. We are going to learn the maths behind that. You may not find it helpful in learning the maths, but you will be knowing exactly why why the indicators are not working uh, in a certain condition, why these indicators are not working in certain condition. If at all you'll be knowing the math behind that, then only you can confirm that yes, because of this thing involved in this indicator, this is not working. So what simple moving average takes into consideration is it makes average of n periods. So what SMA does is exactly SMA is equal to, we are taking n periods into consideration and averaging out the price of n period, and we are averaging out. So the formula is P1 plus P2 plus P3, and this goes on to Pn, which is being divided by n. We have many kinds of SMAs available. Like we have a 25 period SMA, a 50 period SMA, 100 period SMA, and that goes on. But if it's 300 period, normally we do not take more than that. Whenever we have to use periods such as 300, we take weekly SMS of shorter duration. So now coming to how an SMA can be traded. SMAs are actually traded in two ways. The very common and even it's quite successful is the crossover. The other one is it tells us the support and resistance. Just do not follow this what I'm not, I mean to say, I'm not writing it in totally, so just abbreviations I'm using, so you can just hear me what I'm saying and you can guess it's resistance. So coming to how to trade, I'll be also showing by taking a chart how exactly it is being traded. Now one more thing, is the longer the period of SMA, stronger the support and resistance. In this case, I'm talking about. The longer the period of SMA, the stronger is the support and resistance. As you can see, the SMS for each period follows price actions closely because we have taken the price. We do not need to lead these mathematicals onto our trading terminals. That is being already done in the backend. We just for learning purposes we are doing this. Lower period SMS, again, now coming to how to trade. This is what I have explained about support and resistance. The longer the period, I will be showing in a chart itself. The longer the period of SMA, the stronger is the support and resistance. Now coming to crossover, how a crossover is being traded. Suppose we have taken two periods SMA, one is 25 and the other one is 50. So lower period SMA coincide and going downwards from the higher SMA. It may be downward or upward. So whenever a 25 period SMA, you will be finding lines like this. Yes, the simple moving average lines over your chart. Then a 25 period SMA first will coincide. This, if suppose this one is a 25 period SMA and this one is a 50 period SMA, this is the point where they are coinciding. The first setup is needed is they coincide. If 25 period SMA is equal to 50 period SMA, this is the period which we need to watch. And what happens exactly next, how to trade using that? When a 25 period, again a 25 period SMA is greater than 50 SMA, that means if suppose this is the 25 period SMA and this is the 50 period SMA, it look to this point. This is where the 25 period SMA coincides and it is greater than, it went up than the 50 period. Here comes the buy signal. Here we can see it's giving when the 25 period SMA is greater than 50 SMA, it's buy. It's exactly the reverse. When a 25 period SMA is less than 50 period SMA, then a sell signal is indicated. This is what exactly is being laid. This is how it is being done. Now coming to one more thing I forgot to mention is like in a 20, we need to see the relation between 25, 50 and 100, all these things. So how we act is like green for lower SMA and red. The color actually depends upon you. How does you choose the color? You can take a green for lower SMAs. Yeah, yeah, it can be. Okay, you're telling me to draw as per the color. Okay, okay, okay. Actually, I'm not that competent in paint itself also, but still I'll be trying. Okay, I'll be showing that. Yeah, that I know. I'll be showing that in a chart itself. Just for the time being, you just cooperate with this one. The one which I was telling is like, suppose these are the three SMS available, which we have laid down in your trading terminal: 25, 50, and 100. So the relation should be 25 SMA with 50 period for a shorter term trade, and the relation should be 25 SMA with 50 with 100 for longer period. So now you can understand easily what exactly I am telling. One more thing is, just note down, all these things are to be noted down. If possible, what I am saying I'll also be noting, and I'll be sharing with you. One more thing to note down is, on weekly chart SMS is stronger than daily charts. This comes as as you trade, as you gain experience in this market, this comes easily to you, and which exactly is working. On weekly chart SMS are stronger than daily chart SMS. Therefore, a weekly crossover, the crossover which you have seen in weekly chart, a weekly crossover is stronger than daily crossover. And the same logic also applies to intraday as well. Now let me come to a chart. Is this chart visible? So here, exactly as you have said, the green one is the smaller period SMA, and the red one is the greater period SMA. I have taken here a 50, 25 and a 50 period. So you can see at this point they coincided. At this region, and the smaller period SMA is greater than the longer period SMA. Here exactly you can see at this candle a buy signal is being generated by SMA. So if someone would like, could have traded this from this to this level. So now a question arises, when to exit the trade using SMS. Again, this is also, I was to explain what exactly you people are thinking about the targets and stop losses. Do you people believe is like, the guys who are giving calls, the people who are providing tips, the targets, the SLs which are given, is that so? Like these peoples can see that this is the target, this is where the stock is going. Stock will be moving to that point and will be stopping there, or else this is the SL being provided. The stock will definitely come to this label and stop at there itself. Now targets, it it is actually somewhat possible in case of SLs, because if SLs are given on basis of supports, but targets are not given on that basis. Targets are something which comes with experience, like, yes, this whenever this stock starts moving, it mostly gives a point of 20-30 point movement. This is where it comes, this is where it is being developed. So to trade all these things, being a pro trader, you need to have a TSL, so that you can trade. Because when this stock is falling, the SMA is not signaling anything. SMA started signaling at this point of time, when the smaller period is less than the greater period. At this point of time, a sell signal is giving. But if at all you have traded from here and you will be exiting at this point of time, then no use of trading this, because you have almost gained to this level and again you are losing. So being a pro trader, it is always being advised to use TSL, and you can ride this profit. But again, this is not even a smaller trade, because it's a daily chart. You could trade for around 20-30 points and exit. Again, here you can see SMA being successful. Here a sell signal is given at this candle itself, and it went down to this level. Again at this point also, SMA gave a buy signal, because a smaller period SMA is greater than the larger period SMA. Again it moved to this label. But if you haven't exited at this point, you could have even lost your money. So this is how it's being traded. And the targets, the stop losses, are totally depend upon your own kind of trading and own kind of investment you are having. So these targets which are given, you might be finding that target 1, target 2, target 3. Many people try to book in target 1. Many people try to ride all those targets by keeping TSLs. Those are the people who are actually intelligent, actually clever, who tries to ride the profits. So it's better for a small trader to book around the target 1, because this is the least possible which we think is that yes, this stock should move at least 10 to 15 points. You can find all these things whenever you will be looking at the chart. Yes, from here it is riding upward, that means almost 10-point movement it is definitely giving. So now coming to the next one, that is exponential moving average. Exponential moving average is considered to be better than simple moving average. It is very interesting type of moving average. Another type of moving average, let me close this one. Another type of moving average, yeah, the crossover can happen immediately if you are looking for a intraday chart like 15-minute charts. You will be finding many crossovers, because the price switching which is being taken into consideration is for a smaller period. So you'll be definitely finding many crossovers. So for that, it is not possible in that case to give someone a call. Like people giving tips cannot give tips based on that. It is possible to trade by yourself. You can see directly when the crossover is happening, you can buy and move out of the stock by taking 2 to 3 points. This is where actually the people earn by trading themselves. It's simple that we find a crossover, just buy the stock. You are gaining 3 to 4 points, then exactly at that point you exit the call. Then only you can gain. But if you're taking a weekly chart, a daily chart, then yes, definitely the trend will definitely be for at least 3 to 4 days. Yeah, the chart which I referred was a daily chart. The time frame which you are asking is like the strategy which we are following. Actually we can lead the strategy which we are following, but the problem would be we are following a strategy not depending on the kind of trader we are. It depends upon what kind of trader you are itself. So if I'll be sharing my strategy with you, it may not be helpful to you, but still we have planned that yes, what exactly we are following we will be sharing, because no call sync is being generated by only looking to SMS or EMA or any single indicator. Not to worry about that, I'll be telling you what exactly we are following. And Prabodh sir, yes, it depends upon the volatility. As we are taking price into consideration, it depends upon the volatility. Okay, now coming to exponential moving average, it is almost similar. The trading type is similar. How we are going to trade is also similar, exactly how I have shown in that case. In the case of simple moving average, another thing which I forgot to show is the resistance part. This is again the chart of Bharat Finance. So I have said that SMS can be traded in two ways. Not traded, traded in a way. The first one is the crossover, and the second one the use of SMA. It's not the trading technique; it's the use of SMA is support and resistance. So here you can see if you can take any period over here, it may be a 25 period SMA at 50 period, as per your trade time, as long as you need to keep that. You can see the trend line which is being drawn for as per the chart, and the trend and the support being shown by SMA itself are almost equal. You see this range itself. So here also the SMA was showing that this is the support range. It respected the SMA support range, and even the, it's not exactly it's bearish, it's like it, it changed to the support changed to resistance. Here you can see it went below this level. Yes, exactly, it is bearish and bullish, but it went below this level, and again it touched this. See how this is acting as a resistance for continuously for almost 15 days. Again it went up, but I think this was a fake, like it broke. Always everything doesn't work in this market. Again it came back. See how strong this resistance was. It continuously could not move above this. So here itself the trend started changing. So the point here I am showing both trend line and SMA support is like, yes, both almost work in the same direction, as SMAs are taking price into consideration. We have drawn this trend line by taking price into consideration, as we are drawing using candles. Here SMA also took price into consideration and drew that line. So you can see almost here it respected, here also it came to this level and respected, and here also. So you can open this in your trading terminal, in any trading terminal like investing.com, Zerodha, charting software, any thing you are using. You can see, and please keep all these things in mind. Like this Bharat Finance which I am showing is just the chart of the previous day itself, like of Friday. So you can see how it is acting. Is the support being broke, or it's still respecting the support? It's not like I'm showing a very backdated chart. It's a live chart. So now coming to exponential moving average. No, everything applies for intraday itself, but exactly intraday is something which is totally different. In intraday we'll be finding many fluctuations. So all these indicators are very difficult to work upon on these indicators with intraday. So one thing to say, people trading in intraday itself, if you are fixed, like I should trade in intraday, I do not want to take any positions. So it's very rare, very less percentage of people in this market are available who gains from intraday, because the one only survives in intraday are the scalpers who trade for 1 or 2 points. The big traders who are having crores, they do not need to wait for 15-20 points of movement. They will only trade for 1 or 2 points movement. Again they bought a script. A very small example you can say why intraday itself is not working for retailers is like, suppose a smart money tried to trade in intraday. So he is having crores of rupees. He will place a buy order for almost hundreds of crores. He placed that buy order, and suddenly the price rose up because of his buying. And the time you will be entering, you will see he has also exited, and you will be in loss. So this is the fluctuation being done, as many people trade in the intraday itself. So it's better not to apply all these things in intraday. Yes, intraday is something where a chart comes into consideration, like you are having breakouts. Yes, definitely that day it will give, if you're sure that yes, this is the resistance which has broken by a chart formation, like I have shared in the WhatsApp group itself, that this is, yes, this is the breakout, the pattern which is being formed, this is going to break this. So if it started breaking, it will definitely give 100 points, and it may be in case of it intraday also. Okay, not moving to that again. So now I'm coming to exponential moving average. It is considered to be a very interesting type of moving average, because in exponential moving average, something called a weight is taken into consideration on the back end itself. We are not telling we'll be considering a weight factor. A weight is being added to exponential moving average from that of simple moving average. There are different kinds of exponential moving average. A 50 EMA and a 9 EMA is also considered, and there are a few like 26 EMAs. A special kind of EMA is also there, a 89 period EMA. Now, just similar to SMA, EMA is also traded in the similar way, exactly similar, nothing to worry in that. You will be going to any of your trading terminal. If possible, I will be showing also in Zerodha itself that how actually it is being done. Uh, you will be choosing moving average, and from moving average you will be moving to exponential moving average. You can place, you can change the period, and you can see when the crossover is happening and the other thing. And now coming to the weight factor, which I said, what is exactly the weight factor is, what is the logic behind the weight factor. As said, we are adding weight to moving average. So what is that weight? How the weight is being calculated is, weight is equal to 2 by n plus 1. So suppose we want a 9 period EMA. So as the weight being added, the weight would be 2 by n plus 1, that is almost 2 by 10, that is equal to 0.5. So this is an extra factor which is being added to that. Again, another like time period or price action, the days, number of days being added. So exactly the we do not need require to know the math behind that, but still it's just for knowledge that a weight being added to exponential moving average, that is why it is considered to be a special kind of moving average. Now what is the how EMA is being calculated? You can note it down with me. An EMA is this is the formula which I am writing. It's the closing price minus EMA of previous day, which is being multiplied by the weight which we calculated plus EMA of previous day. So here the weight factor comes into play. What exactly it is doing? It is taking the current closing of the stock, subtracting it from the previous day, and multiplying with a weight. And this is again added to the previous day's exponential moving average. For calculating this previous day exponential moving average, the first one is definitely it's quite obvious that for calculating the first EMA we need to take SMA into consideration for this one. Then after that we can have EMA of previous day. So suppose the closing price think it's 50 minus the exponential moving average would be 48 suppose. Then a weight factor which we have calculated 0.5 plus EMA of previous day again, that is 48. So this is why due the whole thing, why I am saying is this, that why people may say in market like, yes, EMA works better, EMA is better than SMA, and EMA is actually having value. So I explained this because due to this addition of weight, it tends to follow the price action more closely than that of SMA. That is why it makes an EMA more popular than that of SMA. So if at all you are going to trade a crossover, or you are going to give a support and you want to know the support and resistance, it's better to go by an EMA rather than SMA. So I think now EMA and SMA are almost clear. So we'll be moving to the next. Should I show you all like how we need to plot in Zerodha itself, or you people can like you people know how to trade, how to plot that one? So you need to need me to show that, no? Okay, just a minute. I'm doing that. I have not been trading from a while, so I do not exactly remember. Uh, Please tell me that my voice is audible or not, because whenever I have seen few of my classes, like whenever I am switching between screens, there is voice problem. Okay, let me tell you how exactly we are going to plot. It's not working properly. Again, I forgot my username. Actually, one of my brother uses this one, and he tries to learn from the market itself. The password. So most of what happened to this? Most of you are using Zerodha or any other trading? No, no, it's right now. Yeah, Obstacks is also better. But if at all you are using all this for trading, then good. But if you are using for an investment purpose, then I will recommend you to switch for a full-time broker, because these people, I think they are going to that if the small brokers may not be in this market for more days. Okay, let me take Bharat Finance. Okay, so here you can see the chart is uploading. So just I'm telling you how to plot, just how the plotting is being done. Here in the studies itself, you will be finding moving average. Here in moving average, it's already being plotted. It's taken a 50 days SMA. So let's consider 50-day as rate 1. Here it's simple moving average. You can change it to exponential moving average. Then we'll be taking, for crossover, we need to take another moving average. That we'll be doing as 25 days. And let's make it green in color. So here you can see this is being plotted. There is a crossover here. The green one is a 25 period SMA and the red one is a 50 period SMA. There is a crossover here, and the lower SMA is coming down of the higher SMA is less than the higher SMA. So exactly how I said was a buy signal being given at this candle itself. So you can see how it decreased to this level. At this point of time, see how this is being not working here. There is a crossover. It went up, but after the trade you might have taken it fall to this level. So this is where the problem arises. Here also it worked nicely. So you need to like, this is the way it's being done. The one thing you need to do is, like, you cannot depend on SMA and place your trade. You need to have 2 to 3 indicators at least: a momentum indicator, a trend indicator, a volatility indicator, then your chart plotting. Then after depending upon many more things, after going through many more things, call is being generated. So now I think it's clear, like, how it's being plotted. Then whenever I'll be coming to the next indicator, I'll be showing that also, how it is being plotted. And few more things are there, like few people asking how intraday is being traded using this, and more like serious stops, like what strategy we are being used, what are the hidden things in moving averages. That we will come in our advanced version. Like, advanced classes will be starting from January. Almost I'll be completing all these till December, and during January, Nissan may take classes. He will be only telling all these things. He will be not explaining all these things in detail. He will be only telling, yes, this is the point where you need to focus, why this is being traded, how this is being, how we are acting upon that. As long as you will be not knowing all these things combinedly, you cannot act on the strategy which we are going to give you. And after that, I will suggest that do not fully depend upon the strategy which we are having. You need to create your own strategies. By that only you can keep yourself in market. Because depending, because we frequently change our strategies. We do not act on a single strategy every time. Okay, rest apart, we'll be now going to another indicator. I think we'll be ending with this. The one which I'm going to tell you now is a momentum indicator. It's stochastics. So now we'll be learning. Sorry again. This is where I am lacking my knowledge. People I have seen using Photoshop quite brilliantly, but I'm not that kind of guy. But still, so now we'll be learning stochastics. Just give me 1 second. So coming to stochastics, as I said, it's a momentum indicator, or you can say it's an oscillator. I have already explained what oscillator are. Oscillator are those kind of indicators that move in a particular range. It's an oscillator. It is being considered as a momentum oscillator is generally a leading indicator, and I have also shown you the PDF. Now, before moving to stochastics, a very common problem which arises with these momentum indicators, these oscillators, is the very you can say the drawback of a momentum indicator is frequently it will show you wrong signals, as of like suppose Nifty is now 10,300 around price. It will suppose it's moved to 10,400, then 10,450, and goes on. So as this these indicators gives buy and sell signal, not buy and sell signal, but overbought and oversold signal. Stochastics gives overbought and oversold short signal. So it will when it is a continuous upward trend, the when the script is rising continuously at every level, here itself, here, at every level it will be showing that it's overbought, which is a definitely drawback of stochastics. So again, you cannot trade depending on a single indicator or any single chart. Everything need to be considered. So that is what I was saying, it shows high momentum depending upon the period. So one more thing is, I have seen a lot of people saying that RSI is continuously showing. You might be finding in many groups where discussions happen that RSI is showing continuously that overbought region. It's now going to fall. You'll be finding when Nifty continuously rising, people will be saying less. No. Now it's being rose to that high level. Now it's need to fall. It will be falling because RSI is also showing. We'll be coming to RSI, that is the relative strength index. Stochastics is also telling that it's in overbought region. We need to sell that, but it's not like that. It doesn't actually. When I'll be telling you the math behind this, you'll be knowing that why exactly it is not working. So coming to stochastics, it's an indicator. The first one is the stochastics is being developed by George C. Lane. I think I remember it correctly. George C. Lane. George C. Lane is the inventor of this indicator. People, I have seen many people who are around 20-30 years in this market. They have started developing their own indicator by taking into consideration of many different things. The idea behind stochastic oscillator is to compare the current price with highest and lowest price. So here comes the math behind it. What a stochastics does is it compares current price with highest price, the period which we have taken, highest price of that period, and the lowest price. Now obviously, if current market price is continuously moving up, this is what I was exactly trying to tell. Current price, market price is moving continuously moving up, then definitely it will react in similar way. It definitely will tell you that yes, it's in overbought region, because the market price is continuously moving up. So in this case, you need to learn, you need to keep in mind that yes, here exactly stochastics is not going to work. We cannot place our trade based on that. Now let's move to a detailed calculation. There are two kinds of stochastics. You will be finding that in your trading terminal also. One is a fast stochastic and the second one is a slow stochastic. Now coming to fast stochastic. Fast stochastics is being taken. Again, there are two kinds of parameters involved in that. Two parameters. One is percentage K and the other one is percentage D. Now coming to the major part, that is calculation of percentage K. Percentage K is being calculated as current close minus lowest low divided by highest high minus lowest low. Here CC is current close, LL is lowest low, and HH is highest high. Now let's understand percentage K more deeply. Then only we will know what is happening. Why this guy, Jersey Lane, gave this. As the formula suggests, current close minus lowest low divided by highest high and lowest low of current close. See, let me write down this one. C minus LL by HH minus LL. So think of, if current close is higher than higher high, if current close is higher than higher high, then definitely what you will find is like percentage K will be more, because CC is in numerator, and if current close is increasing day by day, you will be finding percentage K is also increasing. So it's quite simple that if current close is high, then percentage K is also high. If current close is low, then percentage K is low. Then here you can understand that why exactly it is not giving the signal, a correct signal of a buy, overbought and oversold. All might be thinking, yes, stochastic gave a signal, yes, it's in overbought region, we can sort this stock from here. No, it doesn't happen in case of a trending market. If the stock is continuously in an upward trend, you cannot apply stochastics. So what stochastic is saying is that this price is higher now and this price is low now. After being considering all the calculations, when you will be plotting this in your terminal, stochastics only signals one thing, is this is the price which is trading now. It also takes price into consideration. As you can see, current close is being used, lowest low are used, highest high, higher high are used. So considering the price into the as a factor, stochastics, what stochastics says is, yes, this is where the price is high and now you need to sort, and this is where the price is low, this is where it is in oversold region, you need to buy the stock. uh, To be precise, stochastics is actually a very useful intraday tool. We'll come to this in advanced version. We'll be telling you how to use it in intraday. It is not exactly the same way which is being used for short-term trades. There are few obligations which we need to apply that for knowing that how it is being applied in intraday. Yes, it's actually works also. I will tell you when we'll be moving to more advanced levels. Now, as said, there are two things. One is percentage K and the other one is percentage D. Percentage D, the role of percentage D is a smoothing factor. It smoothes. When you will be coming to slow stochastics, you will be knowing this more. But now let's see what percentage D, how percentage D is calculated. Percentage D is 3-day SMA of percentage K. Now many people, almost everyone, it's quite simple to use this stochastics. How it's being plotted, how to trade using that, it's quite easy. And even almost 90% of people in this market knows how to use. Uh, if you will be I'll be telling you in 5 minutes, you'll be learning that yes, this is how it is being used. But if at all you will not be knowing the math behind this, this is the problem where it arises. As I have gone into deeper that why it's being not working, I came into this percentage K factor, that yes, being this is added, and it it will not work in case of a trending market. So this is why I came into conclusion. So this is what I'm sharing with you also. Now, now coming to percentage D. So each day we need to compute percentage K. Let's see, percentage K is suppose 50. We have computed percentage K 50, 54, 60. This is what we have calculated in our previous explanation. Now what percentage D does is 3 days simple moving average of percentage K. Now because the percentage K increased, your percentage D will also increase, because we are taking percentage K into consideration here. So percentage D increases if percentage K increases, if and percentage D decreases if percentage K decreases. So again here also it tells is like yes, if price rises, the same thing will always be showing. It will be always telling overbought, and if price continuously is falling, it will always be saying oversold. The most important part of stochastics is the selection of n period. How much period you are selecting. N period in general terms is being like you will be finding in your trading terminal, the default, the standard is being set as 14, but there is no hard and fast rule, and even I cannot force you that you to use a 14 period stochastics. Hence, depending on your trial and error, that yes, you have tried 14 period stochastics, then you will try 18 period stochastics, which is being working. But is as it is being laid down a standard for 14 period is laid down, a standard is being set in, so it's better to try in a 14 period. Now let's understand when you need to increase the n period. I have let said that n is equal to 14, it's standard. So then again you need to know why I am saying that, why when it can be again changed. Now let's understand when you need to change it. There are times when the volatility in the market is too much. Again, the volatility factor came. So stochastic suddenly starts becoming very noisy. You'll be finding Like when there is quite a number of people trading in this market, you will find that the stock is moving up again, coming down. So as it takes price into consideration, the stochastics also would become very noisy. So when we want to smooth the stochastics, we need to increase the N period. It works as a smoothing factor. So you can work on your trial and tested method. You use like you can plot from tomorrow itself. You can see that how it's been working in a 14 period stochastics, in a 18 period. In similar way, the SMA is also 25, 50, 100, more than that. Now coming to the second stochastics, that is a slow stochastics. Do not please go by the name that slow stochastics will work slowly. It's not like that. Slow stochastics is actually better than the fast one for longer trade. Longer trade in the sense a positional trade. It is actually a slow stochastics nothing, but it is a smoothing factor. It has a smoothing factor to the fast stochastics. Here also there are two things which are taken into consideration. Again the same percentage K and percentage D. But here the percentage K calculation is something different. In slow stochastic, the percentage K, here you can know why it's being called a smoothing factor. Here the percentage K is equal to percentage D of fast stochastics. So in the first itself you can know that yes, it's being smoothed already, because we know percentage D was already being smoothened in the case of fast stochastics, and we are taking percentage D as percentage K in slow stochastics. Now percentage D is similar 3 days SMA of percentage K. Percentage K means this one, not the fast one. So in this case, first we will be having percentage K, which is already being smoothened, and percentage D, which smoothens it more. So in total we have got a smoother stochastics in case of slow stochastics. So what I will recommend, use a slow stochastics in a volatile market. When the market is quite volatile, it's better to use a slow stochastics and faster stochastics in a range bound market. Actually stochastics work nicely in a range bound market. It can as I said, it gives false signal in case of a trending market, be it a downtrend market or a uptrend market. It gives false signal. But if it's a range bound market, then yes, definitely it works. And I have also laid down two more things using a slow stochastics in volatile market. Volatile in, it's not a trading or that type of volatile, it's continuously moving up. A volatile means moving up and down, but in a larger range. So in that case you use slow stochastics and a fast stochastics in case of a range bound market. But again the same thing, this may or may not work for everyone or for every trade. So it depends on how you are going to trade. Again we cannot trade on based on a single indicator. This is one of the what I will say exactly, a strategy which we use, that using a slow stochastic and fast stochastics, which I said right now, like using it a slow stochastics in a volatile market, using a fast stochastics in range bound market. This is how I used. We almost those who are very from there are they are in market from last 2 to 3 years, they might be knowing all these things. Now coming to the plotting part, how it's being, I will be showing you one chart and explaining you how it's being traded. Actually, in your trading platform, you'll be finding stochastics range between, as I have already stated, an oscillator actually ranges between this label. So similarly, stochastics also range from 0 to 100. All these things, these indicators are mostly being shown in this part. Here you are having your chart, and in this part you will be having your indicator, volume indicator. Volume is also considered as an indicator. So here you will finding the stochastic moving in this way. Here is the range. This is the range we are looking for, and this is the range we are looking for. This is where it is considered to be 100, and this is where it is considered to be 0. It moves in this direction. Now as again a standard setup. Now overbought is a condition which is greater than, overbought is a condition which is greater than 75 or 80. You can, it's totally depend upon you to keep this one like in a smaller range to a larger range. I will explain the chart itself. Oversold is the range which is less than 25 or 20. Now coming to the chart, as I said, if you want more risk, then you can keep the range less, and if you want to take less risk, you can keep the range more. Now explaining this with a chart, jet, whereas guys, one more thing, like yesterday itself I have found that HUL may be giving a breakout. Jet Airways also, I have said, it's trading in continuously facing resistance, and it broke and it flew nicely. I have also plotted in our I have posted in the WhatsApp group itself. Now let's see here. Here please focus on this cursor. As I said, this is the range where it is showing that it is being oversold, and here it's 80 and 20 which I have kept. You can increase this to 90 level and this one to 10. If you are not willing to take risk, you can decrease this if you are willing to take risk. Here itself you can see it is being telling that it's in oversold region, so you can buy. Exactly, see this candle over here, it went up from here. Now let's see how it's not been working. Yeah, almost. We'll be coming to RSI also, and we'll be comparing both also. So now what I am telling is why, see why it's not being working over here. People will be in trap over here. They bought here. No, stochastics crossover is something different. This the two lines which are there, I have taken two stochastics, that is slow and fast stochastics. It is not the crossover of stochastics, is the two different stochastics, slow and fast stochastics. There is another way of trading stochastic, that is divergence, but we'll come into that after being learning divergence. So here you can see, as continuously it is moving, stochastics failed. It gave signal of overbought. So people might start sorting from here at this candle. After gaining this much, people might start sorting, but no, as it's a trending market, it's continuously moving. See, it's almost February, March to April, almost a month it went up. So here stochastics fells, but see this region, this also said that it's being oversold, you can buy. It again gave a signal. So again here the same logic applies what I was telling about the target and SLs. No one in this market can tell you that yes, this stock is going to reach this level and will stop. It's all trial and success methods. We have tried that yes, this stock, whenever this stock rises, this rises to this level, so we are giving a target. So I think it's clear. Now the plotting part, as the internet is slow, but still I'll be telling you that how this is being done. The chart was of jet airways, will also see that only. Now coming to jet airways chart, let me tell you how we can plot this one. It's also quite simple, nothing in that, a 5 minutes discussion. See, again will be it's already being plotted. Let me cancel this one and I'll be coming to again studies. I'm telling in Jiroda and every chatting software, every chatting platforms available in the market, all are having these indicators. Now coming to stochastics. So here you can see that what we need to change. As said, a normal standard market which market follows is 14. Now the fast stochastic and a slow stochastics, the color you can change. Overbought, oversold, it's as per your risk. You can decrease this one, you can increase this one. When it's 80 and 20, it's showing like this. When I'll be increasing this to 90 level, it will be going up and down. So done, and this is exactly which comes to your screen. This is where, see this one, this is why I always recommend everyone to keep TSL and ride the profit. See here it shows, it gives a proper signal that yes, it's being in oversold region, you can buy this stock at this level. This price is at a lower level, this is definitely going to move up because this is the low which we can see. It takes price, it takes previous prices into consideration. So here when it suggested that a buy should be done, see the stock went up to this level. But this is exactly this is the success of stochastics. This see at this level itself it came and said that yes, it's being overbought region. So if you are an active trader and you are pro trader and you know how to ride the profit, then you could have made a lot of money in this trade. Okay, now as we have understand how to plot this one, and the intraday technique which is being used for stochastics will be discussed in the advanced version, because intraday is something different, totally different. So what I think, another, please remember and please remind me also that after learning divergence, there are few more things. When we will be learning divergence, we can after that we can know how to use divergence and trade in case of stochastics. So as we haven't learned divergence, I'm not telling you about that. But again, another kind of stochastics can be traded in another way, that is divergence. the difference between the price action or the price candles and the stochastics movement. So hope these three kinds of indicators are clear enough. Now you definitely will not trade stochastics in a trending market, and as you all know the math behind this, you will definitely not lose money, and you will be knowing that yes, why it's being not working. So please, whenever using all these indicators, recommendation is ride your profit and keep SL, that you should cut your calls in SLs. So we won't be starting another indicator now. We'll be covering tomorrow. So I think we should close the class here itself. Is it okay? And for tomorrow's session, I haven't received everyone's consideration. Like, yes, is it viable to make a class tomorrow at 12:30? Because I think many people are going, need time in the evening, so that's why everyone is recommending for 12:30. I have no problem. I can go for 12:30. Okay. I think majority is there for 12:30. We'll be going for 12:30 class. So please go by this video. I'll be sending you just after half an hour or 1 hour. Please go by this video, and if you are having any doubt, please post in the group itself. Tomorrow we'll be coming with 3 to 4 more indicators, and we'll be learning. And now you can also see that why the math behind each indicators is important. This is why it lacks in many traders. So thank you. I'll be sharing in the group itself. Actually, I do not plan that much for a class. Okay, thank you. Okay, okay, possible. I'll be sharing tomorrow morning itself. Thank you.